Hey everyone, welcome back to G2's weekly market update, where we break down the top global market stories and what they mean for investors like you. Let's dive straight in. Starting with the United States, the markets had another positive week fueled by easing inflation data and upbeat earning reports. The S&P 500 climbed 1.8%, the Nasdaq gained 2.1%, and the Dow Jones added 1.2%. Small caps also joined the rally, with the Russell 2000 advancing 1.5%. What's driving the optimism? The latest CPI report showed inflation easing to 2.3% year on year, the lowest since early 2021. Corporate earnings surprised on the upside, especially in the tech and consumer sectors. And the Fed signaled it's in no rush to hike rates again, citing encouraging disinflation trends. However, not all was rosy. Weekly jobless claims ticked up to 260,000 and manufacturing PMI stayed in contraction at 49.2. Still, services PMI held firm at 52.1, pointing to continued resilience in consumer-driven sectors. Bonds and credit. Treasuries rallied, pushing the 10-year yield down to 3.95%, the first time it's been below 4% since March. High-yield bonds benefited from the risk-on sentiment, while investment-grade issuances saw strong demand, reflecting investor confidence in the short term. Over to Europe. European stocks were mixed. The Stock 600 ended flat for the week. The big headline was the Bank of England's quarter point rate cut, the first in nearly 3 years, as UK inflation dropped to 1.9%. This move sparked optimism in the housing market, with mortgage approvals rising for the third straight month. In the Eurozone, industrial production rebounded modestly and the services PMI edged up to 51.2, signaling mild expansion. Japan. The Nikkei 225 rose 0.8%, recovering from early week losses. Investor sentiment was lifted by news that US and Japan trade talks had resumed after weeks of deadlock. Still, uncertainty remains, with the looming 24% auto tariff deadline just weeks away. On the domestic side, consumer confidence improved slightly and retail sales grew 1.4% year on year. China. Chinese market saw a modest uptick, with the CSI 300 rising 1.2% and the Shanghai Composite gaining 0.9%. The official manufacturing PMI came in at 50.1, returning to expansion for the first time in 6 months. Services PMI also improved to 51.5. Beijing announced a fresh round of infrastructure spending and reiterated its commitment to stabilizing the property market, which helped lift investor sentiment. G2 takeaway. Global markets continue to show resilience, with easing inflation in the US and UK adding fuel to the optimism. But risks remain, from soft manufacturing activity to geopolitical uncertainties in trade talks. For us at G2, the focus in the coming weeks will be on central bank moves, tariff negotiations, and whether the current rally has enough momentum to carry through the summer. That's it for your G2 weekly market update. If you found this helpful, do not forget to follow us for more insights and tell us which market trend are you watching most closely right now. Thanks for watching. We'll see you next Sunday.